of our first half of the year season, if you like. We will take a month break from here, in which the world could change profoundly as it does every day at the moment. But nonetheless, we're thinking a little bit today about what that horizon might look like, and I would welcome those thoughts from our guest speakers this morning, looking a little bit further down the road than we maybe normally do on a daily basis. But let's kick off with Mark Ostwald, Chief Economist and Global Strategist at ADM Investor Services International. Mark, good morning. Oil prices today at $106 a barrel. It feels like a glass half full kind of day, in the sense that the Nord Stream 1 pipeline has restarted. So maybe things aren't quite as Armageddon as we may have thought yesterday. Your outlook as to where things are sitting at the moment vis-a-vis all things Europe, Russia, and oil and gas flow.
Okay, I mean, with the gas flow, we sort of knew already last week, or on Monday, that it was going to restart. The big question is at what sort of volume levels. We were already down to 40% before. The comments from Putin in Iran, when he had the meeting in Iran on Tuesday, basically suggested that it won't come back at that 40% level. I think the early indications this morning are something like 25 to 30. So we are still looking at ever reduced delivery from Russia, and it comes to ever more of a crunch point. Now, of course, you have to also put this in the context of the drought in Europe, the low levels of water on the major rivers. So we are, I think, in for a pretty grim summer in Europe. The problems aren't solving themselves. In fact, they're only getting worse, and it's not just that flow of gas from Russia. We had yesterday a record low in Eurozone consumer confidence. I think that sort of basically gives a good heads up of how people are feeling right now. And the only slight a bit of thing on the horizon, and you can put it in the context of those flows, is what Russia's experiencing now in terms of Nord Stream 1. And as much as people may say Putin is gaming everybody in terms of saying, oh, well, we need this and that and the other part, unless you deliver it, we can't deliver, and it's not our fault, it's yours, because we're willing to deliver the gas. The fact of the matter is Russia is gradually running out of inventories of everything that you can possibly think of. And this is probably the greatest hope, despite all those very hawkish military comments from Foreign Minister Lavrov yesterday, saying their ambitions are being expanded basically to take the whole of the southern coastline of Ukraine effectively. At some point, Russia is going to reach a crunch point where it basically can't keep going. And it won't, it's not just a matter of making military stuff. It's a matter of actually keeping its industry going because it has other parts. And that's the only sort of ray of light that might actually force them into a situation where they just have to knuckle down a little. It doesn't actually remove the threat, and there would still be a long process. But as for Europe, obviously, I think the bigger problem is, there isn't any sense of cohesion of how to solve this energy crisis. And with Mr. Draghi basically resigning, Mr. Macron running a minority government, Mr. Scholz in charge of a very shaky coalition, it doesn't look very good in terms of taking positive action at the current point in time.
And no prime minister in the UK. Let's go to Jamie Ingram, Senior Editor, Middle East Economic Survey. Jamie, welcome back. Looking out into Asia, your thoughts on, we're seeing Russia still lead as being the biggest exporter into China, knocking Saudi off that pedestal that they like to enjoy on that. Your thoughts on where the outlook for China demand is going, and Asia in general, which is looking increasingly under pressure from all of this economic malaise.
Thanks, Sean. Yeah, great to be here again. As you say, Russia, knocked Saudi off that pedestal in China. They've also knocked Iraq off the pedestal in India. That's another, a crown that a big Middle Eastern exporter has been very proud of in the past. We're starting to see a little bit of a possible reversal of that now. Saudi Arabia seems to significantly increase crude oil exports in recent weeks, possibly as a nice little gift for Biden ahead of his arrival in Jeddah last week. A lot of that crude does seem to be heading into China. So Saudi Arabia could be about to turn the tables on Russia there, especially as Russian flows do seem to be slowing down a little bit into Asia now. We'll see if that is something that's a dynamic that starts to get entrenched, or if it's just a little bit of a blip on that part. Clearly, the big hope that everybody has been holding on to has been China's emergence from the more recent COVID lockdowns. So that's a potential gift for the oil markets. Well, a gift for oil exporters anyway. Let's not talk about gifts to oil markets.
Not a gift to oil consumers.
Yeah, exactly. But then the petchems front's an interesting one. There's definitely been a slowdown there. Naphtha demand, the IEA was warning about that dropping significantly, which is unusual in recent years. So that's definitely a key dynamic to be looking into, is the petchems market within China and Asia more broadly.
Let's go to South America. Jose Shalhoub, political risk and oil analyst in Venezuela. Jose, Venezuela's had it appears, I mean, it's shocking in some regards that in all of this energy security stress, Venezuela isn't being turned to, but nonetheless, there seems to be a little bit of light there. We saw some shipments move from Venezuela to Europe earlier in the month. What's your outlook for that evolving, growing?
Yeah, well, thank you, Sean. Thank you for the invitation. Well, yeah, I mean, those shipments that you're talking about, those were shipments carried out by the Italian Eni and Repsol, the Spanish Repsol, but those shipments were related to the debt payments by PDVSA to those companies, and I mean they were not related to any new oil production. So the thing is, for Venezuela, according to the recent report by OPEC, the production of oil in Venezuela has dropped again. I mean, the trend of the Venezuelan oil production has been tremendously rocky, not being able to recover at all. And I'm always saying that without any, significant investments in terms of, bringing the largest companies, the oil companies, without any significant political changes here, without any, serious US-Venezuela negotiations, you're not going to get any new production from Venezuela, not for now.
Mark, the oil price is firmly stuck. Well, it seems it had a wobble as we saw it drop briefly below 100 last week, but it's recovered back to 106. Given the economic outlook, China still in sort of COVID grip, and their GDP numbers for the year looking fairly weak, given the Europe picture you just painted there, what's keeping Brent crude oil at $106 a barrel, and will it hold, do you think?
I think, I mean, we seem to be zigzagging with oil. One day we're focusing on, demand's dropping off, and the demand stories have been around for quite a few months, but it is that background story of supply. We also had Saudi Arabia this week basically saying we can't up production. We are pretty much close to what we'll, at 13 million barrels. So wherever there are outages, we're not going to get it. And then more importantly, it's the aspect of there's a lack of oil product. And the droughts in Europe also create another problem there, because the supply of diesel in Germany mostly goes via the Rhine, and the Rhine is basically too low. So I think it's basically this confluence of the lack of investment that we've had over a long period, which keeps it up there, and the very fact that you can't suddenly just flick your fingers and say, okay, here's some new refineries, here's some new oil wells, we're going to bring them on stream, because it just isn't there. And I think that's essentially what always comes back. It is the supply side of the equation, as it is with the global economy, which always comes back to haunt people and is very difficult for anyone to deal with, because it is due to a cumulative lack of investment. And you can see it. It's not just the oil industry. You see it in all industries, across the world.
With the economic outlook, I mean, I don't think you can look at any page in a newspaper, never mind just the front page at the moment, without the word recession in it. Given the sort of certainty, it seems, and even today ECB are to raise rates, and the Fed next week 75 to maybe even 100 basis points. Are we now looking at a floor in the oil price? Despite all of that macro negative outlook, oil is holding above 100 because of the fundamentals around supply, the outlook for that.
I personally, yes, I think we are. You know, it's probably a little bit below where we are at the moment, but somewhere in that 90 to 95 area is a very, very firm floor. Other than if you have some sort of seismic event, which basically means demand is expected to drop off a cliff short term, because that's just purging and we've got no depth to any of these markets. But underlying it all, I still think basically oil prices are going to be relatively high to where they were pre-pandemic, simply because this is a structural issue.
Jamie, coming back to the Middle East, obviously we had the big meeting this week, obviously the two big meetings, Biden in Saudi, Putin then the next day in Iran. It seems like a circle that, how does it get squared, this idea that Iran and Russia become so increasingly entwined, both militarily as well as economically and energy, and yet Saudi and Russia remain entwined within the OPEC Plus agreement. How do you see those two sort of the coexisting, given the friction between Saudi and Riyadh, and Russia ultimately is the gateway to Iran becoming a nuclear weapon state?
Yeah, it's an interesting one, Sean. I think that certainly in terms of Russia and Saudi Arabia, both of those states, they're quite good at being able to unentangle what might appear to be conflicting foreign policy issues. So Saudi Arabia is not going to be too upset with Russia for its issues in Iran, so long as it doesn't overtly impact Saudi Arabia. Likewise, Russia is not going to be too upset with Saudi Arabia, so long as its actions don't, vis-a-vis Iran, don't negatively impact Russia directly. I think, clearly one of the big headlines that came out of the Putin visit to Tehran was this idea of Russian support for Iranian gas fields, helping develop them. There were some massive numbers being thrown around, $40 billion. It's very important to state that this was just an MOU that was signed. It's preliminary. There is absolutely nothing binding in this so far. I think that also the fact that the numbers were so big, that points to the fact that, yeah, this is political. This isn't about anything that's actually going to happen on the ground. This is them searching for headlines, showing how much, basically showing how valuable a partner it is, and also Russia flexing, saying, look, we are able to support a country like this. They're not really. I mean, as Mark alluded to earlier, Russia is... they're going to struggle just to support themselves domestically in the near future when it comes to supplies just to keep the economy going on. So the idea that they're going to be able to help with some pretty technologically demanding fields in Iran, I really think that's a stretch. One of the key things that was talked about was sustaining pressure in the South Pars gas field. That was one of the big add-ons that Total was brought in to help out with at phase 11, I believe it was, a few years ago, because maintaining pressure, that's where you really need the technology that Iran doesn't have. Iran still won't be able to, because of sanctions, they're still going to struggle to bring in the supplies needed just to implement these things. And that's if Gazprom even has the technology to be able to actually facilitate this without the assistance of Western majors. So I think a lot of this is just, it's all for show, just for political gain, rather than any fundamental benefit that's going to occur.
And what about the Biden Saudi visit? There's a lot of takeaways seem to want to say Biden lost, Biden was weak. It seemed to be an overwhelming media narrative coming out of the weekend. It seemed to me that a little short-sighted, a little early to call it that way. But nonetheless, what's your own takeaway from the Biden visit?
Yeah,
so like Putin in Iran, or something more substantial?
More substantial. I think that whereas Putin and Iran were seen as, where is this going to lead to? I think the key issue with the Biden visit was this was almost the end result. Behind the scenes, the picture between Saudi Arabia and the United States has improved considerably in recent months. There's been a real concerted effort from diplomatic quarters in both governments that, okay, we need to improve our relations. As much as anything, the oil market functions a lot better when the US and Saudi Arabia are on the same page. So essentially, this Biden visit was the public acknowledgement that, yeah, we've entered a new dimension here. So just that in itself is a win for all parties. People looking for kind of some grand oil announcement that was going to come out of this, that was never going to happen, to be honest. Saudi Arabia, it always likes to operate through the mechanisms of OPEC and OPEC Plus more recently. So sure, they might have come to an agreement between themselves that Saudi Arabia will push for more supplies to come onto the market at the next OPEC meeting, but it's always been that next OPEC Plus meeting where any announcement will be made. It was never going to be while Biden was in Jeddah.
Jose, I mean, we have enough little tips and taps all over the world. We've just been talking about some in the Middle East, but now we've got a US and Mexico fighting, arguing, insulting each other a little bit. The Mexican president, headline on Reuters this morning, Mexican president shrugs off US energy complaint. What's the issue there? Is it serious?
Well, I mean, it's part of what's going on regarding the Mexican oil industry under President López Obrador. According to different Mexican sources and reports, the Mexican oil infrastructure and sector has been under huge stress. Lots of not necessary investments in refineries in Mexico and in the US. Lots of investments not needed right now under President López Obrador, who's been highly criticized. So it's part of I think a kind of a path followed by PDVSA, for example, here in Venezuela, within the same political leaning, like here in Venezuela and the rest of the region here in South America. So I think that Washington under President Biden and under the upcoming administrations will have to deal with a new region such as South America, now almost totally leaning to the left. Now we're waiting for the Brazilian elections. We had this victory in Colombia by the leftist leaning Gustavo Petro. I mean, everybody's expecting on what will he do regarding the oil industry in Colombia. Colombia has been tremendously hit regarding its oil industry, and knowing that Petro has been staunchly anti-oil and anti-shale oil. So there's high expectations on what Petro will do regarding Colombia. And in general, I think Latin America, considering Mexico and Venezuela, I think the only exception is Guyana. Guyana is a tremendously and one of the most promising players in the region. Let's hope that it doesn't fall into this, this phenomenon of, the Dutch cow disease. It gets to conform a solid and stable national oil company, and not, that follows the failed experiment like we did here in Venezuela in the last 20 years or any other example. So in general, I think Latin America, South America, in terms of, its energy situation, is living a critical moment after, experiencing tremendously painful consequences after the COVID-19. Now with the war in Ukraine, the crisis of commodities, all the volatility in prices, considering that Latin America depends heavily on commodities exports, most of the regions. So all this new left that is arriving to the region will have to deal better, and we're not gonna have it easy to deal with, different situations in the region.
More challenges. Let's go to the survey question. Again, the outlook for the coming month or so that we are off air. Where do you think the oil markets are going? What will Brent crude oil price be at the end of summer holiday season, August 31st? Closer to 90, closer to 100, closer to 110, closer to 120. Which of these do you think will reflect where the market is going to go over the coming weeks? welcome your thoughts on that and submit your answers. Mark, just thinking again, sort of ties this last 10 minutes on the outlook for the period coming, the month ahead. Get back to the Europe equation. We had Putin again barking overnight on the threat that if indeed the G7 were to proceed with this oil price cap, which I've struggled to quite understand, to be honest, and I've been tracking this stuff for 20 years. I'm not sure how it's going to be implemented, but your outlook for Putin's threat that he would cut off oil supplies to the world and these other outlooks for the coming month through the end of the summer.
Well, I think quite a lot of it is actually just bluster, simply because Russia needs those revenues. It needs the oil revenues, it needs the gas revenues, because it hasn't got anything else. Yeah, and because what comes in on the agricultural front is just a fraction by comparison. In terms of the idea of putting in an oil price cap, I couldn't agree with you more. I mean, the whole idea is crazy. Every example that we've got from history basically says you put in a price cap, basically you defer output, and you then squeeze the price higher. That's the very simple equation. It doesn't work. So it's a crazy idea, and particularly when one thinks of what we've seen in terms of Russian exports of raw materials, of commodities and of energy in the last 3 months. It all just basically ends up in India or China, as long as the prices are not incorrect. So, it's going to continue to be a lot of talk, but the reality of the action, I think, will look rather different. Russia will probably try and game this from the aspect of the more that they can get take up of product from Asia, the more that they can cut off to Europe. But that is a balancing act rather than, oh, we're just going to cut you off. So I think that's the context which one probably needs to see it in.
And Mark, just your thoughts on where does the war go over the coming weeks through the summer? Clearly, there's been the consolidating gains of Russia in the east, and this threat to go further, it's always been there. I mean, in some ways, it seems, I'm not a military expert, but I can't see how Russia can sit still. They either have to keep moving or they retreat, but sitting still doesn't seem like a military option. Your thoughts on where the war goes in the coming month or so?
Well, I still think this issue of their own supply lines to their army is a big one, and it's clearly hampering their efforts. I'd rather suspect that we're going to carry on as where we are, with this brutal bombardment of vast parts of the Ukraine, but not actually making a whole lot of progress. And it is very much an entrenched war, very much along the lines of the middle years of the First World War. No one's making any progress. And as long as supplies to the Ukraine can be kept up by the West, which seem to be reasonably good, it's not actually going to change very much, sadly. I think in the longer run, it is this whole issue of what happens with the Russian economy. But that's probably not going to be something which becomes a real breaking point for Russia until the fourth quarter.
Jamie, looking forward, of course, while we are away, OPEC Plus will be meeting again. They are now in the end zone of the current agreements, having to start to think about life beyond this current agreement. Do they renew? Do they have a big fight over quotas? What's your outlook for OPEC Plus and the direction of the oil markets over the coming month?
Yeah, when it comes to OPEC Plus, so they're meeting again on the 3rd of August. They're going to be chatting about what on earth they're going to be doing from September onwards. My suspicion is that they will come to some sort of compromise agreement that will give them the flexibility to increase output a little bit. But outside of probably just the UAE, frankly, there's not much appetite to really increase production that much within the group. Most members cannot increase production. Saudi Arabia, it's slow going in terms of the pace of increases there, I think, and they definitely are probably the most vocal member within the group when it comes to retaining a good spare capacity buffer to deal with any outages. I mean, just look at Libya, for instance. That's always a potential source of massive outages that they want to keep some reserve back for. So I don't think they'll probably commit themselves to any set number. I don't think we'll come out of the next meeting saying Saudi Arabia's allocation has increased to 11.1 million barrels a day or anything like that. But maybe we'll see them switch to a group ceiling, whereby the nominal quota for the entire OPEC Plus group stays the same, but instead of having individual country allocations, it's okay, let's so long as we don't increase above this overall ceiling, you can kind of produce what you want to see. That will enable a little bit of flexibility from the UAE, Saudi Arabia, maybe Kuwait, possibly Iraq as well, to add a little bit, though they've got some significant export capacity issues that are really holding them back. When it comes to the overall markets, I mean, generally the consensus is that we're going to start to see a little bit of inventories continuing to build up in the coming months out to the end of 2022 at any rate. So I suspect that we will see, when it comes to OPEC Plus again, they won't want to push the boat out and talk about what happens beyond the end of this year. It's going to be, look, there's a lot of volatility. Nobody knows exactly what's going to happen with China, recession. It seems that there's certainly an economic slowdown. No one's denying that. We'll see the scale of that, but we want to keep our powder dry and just continue monitoring this on a month-by-month basis.
And Jamie, just quickly, do we go into this season break, holiday break, with the sense that Iran talks are now dead? Anything other is a misnomer.
Yeah, I think that there's not much optimism in either camp, frankly, for a breakthrough on that, and certainly nothing that's going to release any barrels this year.
Okay, let's go to the survey result before we give Jose the last word this morning. Survey question, Brent has got a few people on 90, a few on 110, and nobody really sitting on 120. So that's kind of interesting. So we're more seeing perhaps more to the downside than the upside. Jose, your outlook for the coming month, the rest of the summer, with the outlook for South America. And I'd welcome just a brief insight. It's not unimportant, but one of the sticking issues between the US and Venezuela is Venezuela's holding of American citizens in jail there, and that is keeping that relationship from having any breakthroughs. Just your outlook on that and the markets going forward.
Yeah, sure. That's a total bargaining chip for Maduro to keep on leveraging and negotiating with the US. Maduro just recently took a trip that took him to countries like Iran, to Algeria, to Azerbaijan, and it was like a muscle flexing move by Maduro to show the US that, hey, I got support. I got support from Iran, from Russia, from Turkey, and those are his allies. I mean, and that's what Maduro is doing right now in trying to get the US back to the table and trying to negotiate a new oil phase, a new oil era between the US and Venezuela. But the Biden administration is not, there's lots of Venezuelans in the US. There's lots of it's a big Venezuelan community there, a big lobby in South, in the Florida state. But the Biden administration is not going to commit his presidency and his term to any new negotiation that can allow more oxygen to the Maduro regime in getting new deals and getting the US companies back to Venezuela. I don't see it that way in the coming months.
There is a wrap up. It seems to me going into this season break that there is enough. I mean, we just had the story insights on Mexico, because Mexico go down the pathway of Venezuela, where the U.S. relationship in Mexico, if Mexico is seen to be violating the free trade agreement, that they get under sanctions, and then there's another oil producing country under sanctions with Russia and Venezuela and Iran and perhaps even a Mexico. It seems that with the other issues at play, it's hard to see where oil prices fall, except for maybe, as Mark mentioned, some sort of Armageddon collapse and demand moment if indeed that was to come. Obviously, there is this soft deflating of the balloon in terms of the economic outlook and recession sort of forecast for the end of the year, rather than any cliff in which the world economy will go over and collapse demand as it did at the beginning of COVID. Monkeypox doesn't seem to have quite the same bite in it. That's a wrap. Oil prices, Brent crude trading at $106 a barrel this morning. Thank you so much, Jamie, Mark, and Jose. Have a great summer holiday season wherever it takes you, and we look forward to seeing everybody back here at the end of August. All the best. Thank you very much.
Thanks, Sean. Have a great summer.